Hello, Crypto Novus. Welcome back. My name is Chris Brown. I'm the host of the channel. I wanted to do a quick video today on the crypto market, specifically on the influence of Goldman Sachs. Uh, Goldman Sachs came out with a report earlier this week. We'll get into it briefly at the tail end of the video, but it was a really important report in regards to Bitcoin. This week, Goldman Sachs has been giving very positive reports towards the crypto market. This article right here indicating that Coinbase could climb up to over $300. Presently, if you look at a TradingView price chart, Coinbase as a stock is at $241. It bottomed out, it just wicked down as low as almost 210, 209, but it has really kind of been hovering at around 223 on the lower side of things. Then the next positive news that we have in the market is the crypto has become a full-fledged asset, but prices are still dictated by FOMO, and investors face barriers to entry according to Goldman Sachs. So again, what this article is talking about here is crypto prices despite the recent sell-off. So last week we heard all of this bad news about Bitcoin, about the crypto market, and the price just completely fell. I personally and a lot of other people believe that it was just simply manipulation. And if you look and kind of read between the lines, manipulation by whom and for whom. So here it says crypto prices despite recent sell-off are showing big gains over past year. Said next bullet point, mandates for corporate boards are among three key issues keeping more institutions from increasing their involvement in the market. So basically boards are still kind of like not certain about it. Bitcoin liquidity has deepened, with Bitcoin dollar spot volume surging to 1.5 billion from 300 million over 12 months through April. So this is another really good article. It is on Markets Insider. I'm not going to read the full thing for you, but this is a good article to read. On the mandates, I want to read this one. For corporations, increased involvement depends on whether their boards feel such involvement makes sense given the nature of the company and its objectives. And some investment funds and asset managers do not have the authority to invest a portion of their portfolios into crypto. So this is part of the battle that the corporations are having. So there's a lot of discussions at the corporate level about store value, where to place it. Along with that store value, here's another article. Again, Goldman Sachs making a claim that Ether has a chance of eclipsing Bitcoin dominance as a store of value. So in this particular article, it says Ether has a high chance of supplanting Bitcoin as a dominant digital store of value, and this was said last Friday. It says the bank notes that Ethereum 2.0 is expected to increase transactions to 3,000 TPS compared to just 7 for Bitcoin. We all kind of know that, and of course we all know about DeFi and NFTs, as Ethereum is the platform of choice for those two particular niches within the market. Let's keep going. Here, that article came out yesterday on Tuesday. Here is Wednesday. Today, Wednesday, what do we see? We see ex-skeptics, Goldman Sachs and billionaire Ray Dalio are now on board for Bitcoin. So this article goes on to talk about here, Goldman Sachs publicly acknowledged Bitcoin as an investable asset. That's its own separate asset class, other than just being a commodity and lumped in with gold and silver and other types of commodities. So this is really important for the crypto space. Dalio, once an outspoken critic, admitted to owning now Bitcoin. Other large institutional clients are very interested in the category. Along with that, if you guys, I'm not going to get into it today, but if you look at what Michael Saylor did with the MicroStrategy, I believe he made an investment of around $350 million in Bitcoin last week when it took a dip. So he just keeps doubling down every time it goes down, and that's important to note. So as we go through and read this article, I'm gonna take a little pause on this one. It says Bitcoin on Monday, McDermott, who made an announcement in a research note as to his subscribers that Bitcoin is worth paying attention to. It says Bitcoin is now considered an investable asset. It has its own idiosyncratic risks, partially because it's still relatively new and going through an adoption phase. And it's just beginning the adoption phase if you look at the overall curve. At it, and it doesn't have one of, and it doesn't behave as one would intuitively expect relative other assets given the anthology of digital gold. So I think as investors, you have to keep that in mind, and that this is going to behave differently than other assets. Therefore, you have to deal with it differently. It says, but clients and beyond are largely treating it as a new asset class, which is notable. It is not often that we get to witness the emergence of a new asset class. This phrase right here is again one of the things that I just kind of want to bring to the channel, that you really have to see where you are relative to the big picture. And it says it's not often that we get to witness the emergence of a new asset class. For those of us that are in the market at this present time, this is the best time to be in it. So again, don't get too shaken up when prices do some crazy things. Then it continues to talk about Ray Dalio and his outspoken position. Says this is, and he goes, let's see. The billionaire invested immediately to owning Bitcoin and saying that Bitcoin was his preferred asset when compared to bonds. So now, again, the expansion of this asset class, what it's being compared to, and what old-time investors are beginning to realize about Bitcoin and about the cryptocurrency market in general. So then you can go through and read this article. Again, it's on investing.com. I want to get to the meat of it, and that is basically Goldman Sachs has put together a report. And this report came out actually on the 21st of May. And the title of the report is a new asset class. So what I'm going to do now is, here it is. This is it's a 41-page report, as you can kind of see, and it has interviews with some very key players. Now, I'm not obviously going to go through all 41 pages, but I recommend that you go to Goldman Sachs site, which was the previous slide. You can easily download this report, which I have done, and I'm definitely going to read this report, and may actually come up with a special thing for the Crypto Novas community, in terms of maybe a special webinar on exactly what this report says. But I mean, you've got interviews with, Michael Novogratz from Galaxy Digital Holdings. You got Michael Sonnensen from Grayscale Investments. You can read the list there, but it's obviously top players that are in the investment world, that obviously support the cryptocurrency market and spend a lot of time with investors, advising them, etc. The thing that I thought was really interesting in this report, now this report, as you can see, has a lot of great data in it. I'm going to skim through it, but I want to go to this page here that makes some comments, and I'm not going to read everything, but here's a comment from Michael Novogratz from Galaxy Digital, and I'm just going to read his paragraph. He says, we start speaking with Michael, which is active in crypto investing and trading, assets management, and venture financing. He argues that the mere fact that the critical mass of credible investors and institutions are now engaging with crypto assets has cemented their position as an official asset class. And despite the price volatility, he doesn't see that institutional interest in Bitcoin, which he primarily views as a convenient store of value, waning as long as the current macro and political macro and political backdrop in which the government imperative has no imperative to stop spending on social issues that the Fed is largely financing. Bottom line, what is he saying? As long as the government continues printing money the way that they're printing money, institutions are going to find the cryptocurrency market as a great place as a store of value to hedge against what's happening to the buying power of the dollar, which is dropping. Michael Sonnensen, who is the CEO of Grayscale, this is what he has to say. And now he's the world's largest digital asset manager. Okay, agrees that the institutional investors now generally appreciate that digital assets are here to stay. Again, if they're here to stay, as a simple retail investor, when prices drop like they did last week, should you really be anxious about that moment? With investors increasingly attracted to the finite quality of assets like Bitcoin, again, so this is really important. With investors increasingly attracted to the finite quality of assets like Bitcoin. So we're basically talking about coins that basically have a limited supply, which is verifiably scarce as a way to hedge against inflation and currency debasement, and to diversify their portfolios in the pursuit of higher risk-adjusted returns. Even though crypto assets have behaved as anything but a diversifier over the past year, selling off more than traditional assets as the COVID-19 pandemic set in. He says that their faster and stronger rebound in 2020 only reassured investors about the resiliency as an asset class. So real quick, I kind of stumbled over that, but bottom line, what he's saying is that since you have assets like Bitcoin that has scarcity in their count, even though they went down when the pandemic hit, they rebounded much stronger than stocks did and much stronger than other commodities typically we invest in, like gold and silver, from 2020 to 2021. Because they rebounded so strongly, it reassures us that this asset class, even with its volatility, has resiliency. So that's just 2 paragraphs out of a 41-page document. And I'm just going to skim through it real quick. It is loaded with information and charts about the market and an evaluation and what these experts have to say. Bottom line is, I think you highly ought to get a hold of this. I think you ought to sit down and read it if you're a serious investor in crypto. I'm going to leave you with this last thought, and that is price predictions for 2021 for Bitcoin. It says here, this is Yahoo Finance. Experts make 6-figure forecasts despite crypto crash. All right. And so, again, I'm not going to read the whole article to you, but here we've got predictions of some claiming the next peak will reach well above 100K. And then down here at the very, very bottom, we have a prediction from a gentleman by the name of Fred Shabrista. Not sure exactly if I said that name correctly, but he says, 2023, he could see 250. A price of Bitcoin of being at 250,000. So this is actually video was a little bit longer than I anticipated being, but I thought there was some really good nuggets in here, and I skipped over a lot of the meat just so that you can get exposed to the articles so that you can read them yourself. But the Goldman Sachs report and the statement that Bitcoin is an asset class on its own is an incredible advancement in this space. And I want to leave you with that note. This is Chris Brown, Crypto Novus, where you newbies can become masters. I'll see you guys in the next video. Have a blessed Wednesday.